Hello students, welcome to today's session on issue and allotment of equity and preference shares. In my earlier video, I have given you a difference, I have given you a detail on equity and preference shares. Now in this video, we will be seeing how the issues of such shares take place. So the process of issuing such shares it's a threefold process, a three-stage process. First, the prospectus is issued in this regard. The prospectus is issued by the company. Against this prospectus, the applicants make an application along with application money. Right? This application money is received by the companies. After the company has received the application money, then the allotment of shares is made. Now how this allotment is made, let us see with the help of a question. This is my question, students. There's a limited company offered for subscription of 1 lakh equity shares of rupees 10 each at a premium of 2 per share. Then 2 lakh 10% preference shares of rupees 10 each at par. The amount of share was payable like this. All the shares are fully subscribed, called up and paid. Record these transactions in the journal of the company. Now, before I proceed, let me just give you very quickly what is the meaning of fully subscribed, called up and paid. Fully subscribed means all the total number of shares which the company had issued have been sold, have been bought by the shareholders. That is being subscribed. Called up means the money against each installment has been called by the company. Paid up means the shareholders have also made the payment against all the calls. Right? Now we start with the solution. Okay. So, how do we start? Since we have to make the journal entries here. Okay. So we write like this. The source A Limited. This is the A Limited is the name of the company. So obviously it will be in the name of the company. Books of A Limited, and it's a journal that we are making. So first thing first, from where do we start? We start with first thing first, that is we start with now with the receipt of application money. Okay. Now since we have two types of shares, so now this is to us. Whether we make two separate journal entries, one for equity shares, other for preference share, or the most practical ones, which is actually used in the company also, this is done in one journal entry only. The only thing is that every time we are making for the entry for equity shares as well as for preference shares. So the first journal entry would be of the receipt of application amount. Okay, so that would be bank account debit to share application account. Okay, so equity has an equity share are these are equity shares, and total number of equity shares subscribed for are 1 lakh, right? So the application money received would be 1 lakh shares multiplied by 3. This makes it 3 lakh. The same amount is credited here also, 3 lakh. Okay. And the narration here would be, that is the application money received. Now, the next uh, entry would be of the transfer of this amount to share capital account, because that is the real account. So equity share application account to equity share capital account. Okay. Now, amount goes, because it says that all the shares are fully subscribed. So this amount has. Now, then comes the allotment. Now, students, let me make something very clear to you here, that this date column has its importance. Since in this question, we have no date has been mentioned, so I am leaving this column blank. Otherwise, if the dates are mentioned in the question, then you have to write the dates also here. Okay. Now, when it comes to allotment, the first entry is made of the due. Okay. So, due entry would be, that is equity share allotment account debit to equity share capital account. Now, amount will be how much here? 1 lakh into 5. Okay. So this becomes, this narration out here would be what? That is transfer of share account to share capital account. Okay. The narration here would be, that is the allotment account due for payment. Now comes the receipt. So bank account debit to equity share allotment account, and narration will be the allotment account amount received by shareholders. Amount is say 5 lakh, and now comes the post call. So there we have first. Acha. There is one more thing to be taken care of here. It says allotment money includes premium. Premium is of 2 rupees. Now that means what is to be done here? Now here, this premium allotment has to be done here. That means this allotment account money has to be transferred in 3 plus 2 structure. Okay. That means out of these 5 rupees, 3 rupees goes to share capital account and 2 rupees goes for premium. Okay. Now, so here we are going to make a slight change. So this would be to share capital, amount goes is 3 lakh, and then to 2 lakh is my premium amount. Now, where does this premium amount goes? This amount goes to security premium reserve account. This account is created exclusively to record the premium amounts paid. Okay, then we have this entry. Okay, now we have first call. Now, as we can see that this is the last call to be made, so this can be called as first and final call, which means that whatever is the last call being made by the company, we write this word final with that call only. Now, this is a 4 rupees call. Okay. Now, here also, we do the same thing. That is, first of all, we make the due entry, that is share first call, account first and final call account. Amount would be, it's 4 rupees call, so 4 lakh to equity share capital account, 4 lakh. Okay. Then the narration would be that is the first call amount due for payment. Then the receipt of this amount has to be recorded. That is bank account to equity share first and final call account. And the amount again is same. So with this, and the narration for this is that is the share first call amount received from the share. So this completes my journal entry for equity share capital. Now, the same way this would be done for preference shareholders. So now if we have to make the same journal entry for preference shareholders, it's just that we have to write preference shareholders. Now, preference shareholders, whenever we are making the entry for preference shareholders, please don't forget to write this percentage. What is this percentage? This is the percentage of the dividend the preference shareholders are going to get. Okay, so now the first entry, if we make now for the preference shareholders, the entry would be like this: bank account debit to, now we write here 10% preference share application account. Now, amount and the money is same, but number of shares are 2 lakh. So this is 2 lakh into 3. This makes it 6 lakh and 6 lakh. Now, the second entry would be of transfer entry as it is, as we had in case of equity shares. Same entry has been made. Now comes the allotment. Now here allotment is 4 rupees and does not include any premium. That means now here we will be omitting this entry. So share application allotment is of 4 rupees. So this is entirely 4 rupees for 2 lakh shares multiplied by 4. Okay. And this makes it 8 lakhs here, right? And here also, no such amount has to be mentioned. And this also becomes 8 lakhs. Okay. Then comes the receipt of this amount, right? So this is the 1 second. Yeah. Okay. This becomes 10% preference share allotment account and amount received is complete, that is 8. Then we talk about the first and final call share. So again, 10% preference share, post and final call account. The final, this is of 3 rupees per share. Okay. So this is 2 lakh into 3, that is 6 lakhs. And then comes this receipt entry, that is bank's account to 10% preference share capital. Shares, post and final call account, again the same amount, that is 6. So this is how we make the entry for preference shareholders, preference shares also, right? So with this, that's all for today's session, students. I hope you all understood the topic. Keep practicing, and I'll see you the next time. If you have any doubts, please contact me through my Urban Pro profile. Thank you.